Amidst controversy over Boris Johnson's latest move to push the UK toward a so-called hard Brexit, our next guest is bullish on the UK. Michael Grant is with us now. He's Calamos Investments Co-CIO and Senior Co-Portfolio Manager. You don't hear a lot of folks that are bullish on a hard Brexit. You hear lots of, forecasts of doom and gloom of what it's going to mean for the UK. Why would it be a good thing?
Sure. Well, the first point to make is that British assets, British sterling-based equities, are pretty much the cheapest asset in the global equity world today. Most of the studies show they're the most underweight asset within the global equity universe, and much of that reflects this consensus view, especially on the continent, that Brexit is a sort of economic suicide. Our view is different because ultimately the European Union is a sort of protector of a stagnant status quo. Most economists, if you ask them what drives economic growth, they'll tell you productivity. Productivity is a mix of laws and taxation, education, the legal system, openness to innovation, and so forth. And one of the reasons why the European Union is the worst performing major economic region in the world is because it has low productivity, driven very much by the policies of the European Union. So breaking away from that regulation and that tax policy is sort of like receiving a get-out-of-jail card free in economic terms.
It's not going to be so free, though, is it? I mean, in other words, in the meantime, you might not buy the worst sort of forecast for what it's going to mean for the UK, but in the meantime, it does seem like there's going to be pretty significant disruptions to trade, to a flow of people, et cetera.
So after 4 decades of integration, there will be some disintegration costs that both will be incurred by Britain and the European Union. But the point is that there's a lot of upside for managing the economy in a pro-growth, pro-productivity way that doesn't exist when you're a member of the European Union, and that's the essential point. Leadership will still matter, but longer term, there's no reason why Britain cannot succeed. In economic terms, there's a lot of aspects to the debate that are political, but purely in economic terms, I think the UK economy will be just fine.
Are they not going to still be beholden, I guess, or held to a lot of European regulations and standards, especially for those British companies who still want to do business on the continent?
Well, part of what they're arguing over right now is this very issue, because the Irish backstop was the poison chalice to ensure that Britain stays close to the European Union, and obviously it doesn't want to do that. So a big part of the fight that's going on is getting rid of the Irish backstop, which will then free them in trade terms and regulatory terms and so forth. With respect to trade, obviously the UK runs a significant trade deficit with Europe. One of the things that economists don't tell you is that in a trade war or a trade conflict, the countries that are most vulnerable are those with the surplus, not the deficit, right? The surplus is on the continent. If you run a deficit with a fairly diversified, robust domestic economy, which is the case with the US and China, which is the case with Britain and Europe, you can actually do just fine.
So, Michael, I understand this point that you're making. It's cheap relative to every other equity in the world. That makes sense to me. But how do you know it isn't a value trap?
Sure. So first, let's just be clear. It's very cheap. I mean, the market in the UK yields more than 6% in dividend terms alone. Think of what that means with interest rates where they are. The key is the domestic UK economy, and can that do well after Brexit? And our view is absolutely it can with the right policies. So in terms of domestic UK growth, once we get beyond this extreme uncertainty, which has been dogging the economy for 3 years, I think it would be natural to expect some sort of improved growth prospects once the clouds clear.
Okay. Thank you so much, Michael.
Pleasure.
We'll get to the other parts of your portfolio next time, but
Okay.
obviously Brexit very timely. Michael Grant, thank you so much.